Hey, what's going on, guys? My name is Richard, and welcome back to another stock market outlook video. I hope everybody's taking some time on this Saturday to sit back a bit, relax, de-stress, take some deep breaths, because it definitely was a very volatile week in the market. And overall, in this video, we'll go through the price action of the major indexes, talk about how my previous watch list performed, which I post a new one every single Sunday, and then finally, we'll round everything off by consulting the most recent IBD Big Picture article and the GMI signal from wishingwealthball.com. And we'll use all these different sources of information to try to determine what the current trend of the market is. And hopefully that should help guide you and tell you how aggressive you should be in the markets next week. And if at any time you enjoy my analysis, please go ahead and leave a like down below. It really does help me out and my channel. And if this is your first video of mine that you've seen, go ahead and subscribe as well. I post more videos just like this one every single week. But with all that said, let's start with the analysis. All right, so let's start off the analysis with the NASDAQ on a weekly time frame. And taking a look at the bar, you can see that we were down 1.63% with a closing range in the lower third at 25.1%. And looking at the volume, you can see that it was slightly higher than the previous week. So the expectation from the weekly bar is either we go flat or slightly down. And taking a look at the S&P 500, you can see it actually had a worse week, down 4.78%, with a closing range of 22.86%. And volume was slightly higher as well on the S&P 500, and the expectation is either flat or down. And taking a look at the IWM, you can see it also had a bad week, down 7.93%, and also undercut the low of the previous week as the NASDAQ and S&P 500 also did, but it's holding this 21 EMA on the weekly, and you can see that volume was much higher this week than the previous ones. So that is the weekly time frame for the major indexes, and let's go through a couple more to get a sense of the overall market. So overall, gold was up on the week, up 2.92%, and it had a strong closing range of 74.24%, and that means that the expectation is that gold continues higher, and it's been very tight the past couple weeks and could have a breakout very soon. Taking a look at the VIX to get a sense of volatility, you can see that this really tells a picture of last week. You can see that it's up 47.19% last week with a closing range of 58.64. So overall, this isn't a good sign, and you want, as a trend follower, to have as low a VIX as possible, and right now it's going in the wrong direction. Taking a look at XLF, you can see it also had a bad week, down 9.18%, really erasing all the gains from the previous week, and it was on higher volume. And taking a look at the FFTY, you can see that growth stocks in general held up pretty well, just like the NASDAQ, down 1.17%, although volume was higher. And its closing range was 32.63%, so flat or down is the expectation. And now let's go through the NASDAQ day by day and get a sense of what next week could hold. All right, so starting with the day by day analysis, you can see that on Monday we had a slight gap down, but overall a continuation of the momentum from the previous weeks. And it was a very strong close, and from this, the expectation was that we continue higher. And then on Tuesday, we had a gap down, which I always prefer over a gap up, honestly. And we had another strong showing, and overall, we finished in the upper third of the bar, which is a positive. And once again, that momentum carried on, and on Wednesday, we might have overstepped our bounds a little bit. You can see we're peaking above the upper Bollinger Band here, and you can see that overall we were up 1.28%, but once again, I don't like gap ups, and this kind of had the sense of a stall day. And then on Thursday, you can see we had a big gap down and then a continuation down throughout the entirety of the day, closing right at the bottom, which is a huge negative. And from this, the expectation was that we continue down on Friday, but we had a big gap up, but a ton of volatility throughout this day. We were up, we were down, but overall we had a strong close and actually gave us the expectation that things will stabilize a little bit next week. And overall, all the moving averages are moving in the right direction. We're holding above the 21 EMA, and currently, in my view, the uptrend is intact. This was just a pullback. So that is the day-by-day analysis. And I also want to show briefly these trend lines that I drew last week. And you can see that on Wednesday, we peaked above it as well as the upper Bollinger Band, and it found support right at this trend line on Friday, which is a positive. So this means that right now the uptrend is intact, although it is a very steep increase. So honestly, I wouldn't be That's a prize if we slow down a little bit and maybe go sideways for a couple weeks or more. So that is the day-by-day analysis. And now let's check out my watch list from the previous week. All right, so even with the volatility last week, we did have some good performances. D-Dog had a nice week, up almost 10%, Beyond Meat up 5, LVGO up 5, and a couple others had decent showings as well. And D-Dog, you can see, broke out on this Monday above this point of resistance and overall drifted upwards throughout the week and kind of ignored the market for the most part, which shows very good relative strength. And Beyond Meat as well did pretty decently. It broke out on Monday, but overall kind of drifted downwards and was affected by the market. And LVGO as well, you can see, kind of just drifted higher, tried to break out, but was knocked down once again on that Thursday, but posted a decent inside day on this past Friday, and this will be on my watch list going forward. Talking about the losers, let's talk about ENPH, because I definitely think this was a learning experience for me. So overall, it was pulling back, and I knew that going into the week. It was bouncing on this Friday, and I was expecting to enter on a green dot entry if it continued upwards like this. But overall, it kept drifting downwards and actually fell right to its 50-day moving average, which is this green line here. And the entry that I tried on this was a bounce off the 50-day moving average, but I did buy it when it was still falling on this day, and I bought it on a short intraday uptrend. And looking back, that isn't really the way to go. That isn't how you want to play those 50-day moving average bounces. Instead, how I'm going to play it going forward is similar to how I played Dexcom a couple of weeks ago. So the previous day, it fell right to its 50-day moving average. Then it gapped down slightly, moved down below its 50-day moving average, and then I bought it right when it was breaking above the previous day's close. So I think this is a good rule to abide by. You don't buy it until it breaks above the previous day's close on that 50-day moving average bounce. So that's one thing I learned from ENPH, and I did take a slightly larger loss than usual on this gap down. But overall, it did recover a bit, had a Bollinger Band bounce, and it could be actionable next week, although I will be very careful trading this stock and make sure that it really meets a good low-risk entry setup. AXNX also just kind of drifted lower last week. FTNT also kind of drifted lower. And those are pretty much all the stocks that really stood out to me for my watch list. TWLO is still setting up nicely, and I actually featured it as my stock of the week, so check that out above. Zixi had an extremely volatile week, up 6%, down 12%, up these 2 days, and then down finally on Friday. But this is not really when you want to be buying a stock. When it's super volatile like this, you want to be waiting for it to really tighten up, and really the better setup was right here, and not when it's super volatile like this. You're just at more risk of getting stopped out. So overall, that is how my watch list performed, and make sure you guys tune in tomorrow when I talk about my next one. But overall, before we check out the IBD Big Picture article, I do want to talk about briefly a study that I did using Python, and I'll make a video about this. But overall, I made a pretty cool program that helps determine whether we're extended or not from a moving average. So right here, I've got the 85 SMA, and here you've got a histogram of where we are relative to historical extensions from this SMA. So the blue line here is the previous day, and then the red line is the current situation. So right now we're about 8% from the 85 SMA. And overall, I think this is a good secondary thing to look at because we were moving up quite quickly from all those moving averages. And in my view, we were extended and needed this consolidation. And you can see that it peaked right above it before this crash. And right now it's just peaking above this 10% extension line. So this will be something that I look at going forward. But this is always secondary to price action for me. And another thing that's always secondary to me is sentiment. And as you know, I post each week kind of a sentiment survey to kind of get a gauge of how people are acting on FinTwit. And you can see that last week we really got knocked down from the previous week. We were up at 51%, which is very bullish. But given the pullback, we're down now to a more normal level. And overall, I think that's a good thing because you don't want people to be too bullish. And right now we're back to more normal levels. So with all that said, let's talk about the IBD Big Picture article. And overall, the title for Friday's IBD Big Picture was "The Stock Market Rebound Fades on Coronavirus Lockdown News, and Top Growth Stocks Netflix and Vertex test key support levels. So overall, they talk about how it was very erratic on this Friday, which it definitely was. But overall, the NASDAQ rallied strongly and closed with about a 1% gain. The S&P 500 was up 1.3%, and you had some big boosts from Boeing and a couple of the other airlines, and the Russell 2000 advanced 2.3%, and the IBD 50 rose 1.1% as well. They also talk about how volume was lower on the NASDAQ and New York Stock Exchange versus that Thursday down day, which is a negative, so that removes some of the strength from Friday's rebound. And overall, they talk about the added distribution days on the NASDAQ and S&P 500. So right now we have 2 on the NASDAQ and 3 on the S&P 500, which still is relatively low. And they talk about how it's normal for stocks to take a break and consolidate. And hopefully this should set up new entries and new bases. And they talk about Netflix and Vertex, which are approaching buy points. Tesla, which I was in but got stopped out on Friday because it breached my line in the sand. And they also talk about Corva, which is a leaderboard stock, and it's pulling back to a buy point. So this could be actionable next week, and it is a chip maker like AMD or NVIDIA. So overall, IBD's take is that we are in a confirmed uptrend, and we have 2 distribution days on the NASDAQ and 3 on the S&P 500. And checking out the GMI signal, you can see it is still green. And the GMI on Friday, the GMI score was a 4 out of 6, so still pretty good, although it was a failed green line breakout on the QQQ on Thursday. So keep that in mind. That isn't the best sign for this uptrend, but we'll see if we can retake that line next week. So overall, my take is we are in a confirmed uptrend, and I'll be looking to add longs at this time. Thanks so much for watching, and please remember to leave a like down below and subscribe if you're new to the channel, and I'll see you guys in future videos.